It's 11:06 at WPSL 1590, the talk of the Treasure Coast, webcaster to the world on TuneIn. And time for the Great Wise Odds. Charles Moskowitz.
Morning, Greg.
How are you?
Great.
I guess, we're Zooming and Amazoning to, 12,000 with NASDAQ today?
I'm going to use an analogy, Greg. You know how when you guys get some horrendous kind of crime and you don't want to play it over and over again for people?
Yep.
To kind of glorify it? That's kind of the way I feel about Zoom today. I mean,
yes.
You know, I think, it's a great company. It's a great product. But, and by the way, the earnings and revenues were fantastic. But it traded as high as 478 this morning.
Wow.
And that was up about 157. So I'm not really sure that it was worth up 45%. Right now it's 443 and change, up still 118. And as good as it is, the best companies have pullbacks and disappointments, or just, it runs out of people to buy it. And so, I'm not going to say I would short it, but I will say I think glorifying it on a day where, the Robin Hood traders and the fractional share people are going to pile into it, as they obviously already have, not my cup of tea. In the meantime, the market started down, and the Dow is now up about 50 and fading a little. The NASDAQ is up 105, and that is on the back of Apple up another $3 on the 4-for-1 split, another 2.5%. The Tesla's actually down a couple of dollars. It was up much higher this morning, and they made the announcement that they're going to issue up to $5 billion more in stock. Amazon is up 40. Netflix is up 20. Nvidia is up 18. So, the NASDAQ is powering higher, and it's basically up just under 1%, and that's well over 4 times the amount that the Dow is up.
That sounds like one of our new
Dennis
anchors.
on the phone?
I'm here.
Okay, I'm going to jump off for one quick second, but I have Dennis on the show. He is absolutely one of the best future traders I have ever come across, and his talent is uncanny. So I will turn you over to him, and I'll be right back.
I think we have to take care of the dogs there.
Thanks, Charlie. Hi, Greg.
Hey, how are you?
Well, I'm doing well. We're starting the nicest time of the year. I used to live around Charlie in Wellesley, which is real pretty with the color change.
Oh, yeah, it is.
It's really pretty here in Colorado. I've lived all over the world. I have a house in Tuscany in Italy, and I lived in the UK. I'm like a citizen of the world. But it's good talking to you, Greg. It's this interesting times because we went through the longest bull market ever for about 10 years, up until about March. And now some people, which I don't agree with, are telling you this is the shortest bear market that we've ever had. And the problem is, like when you go to a doctor and he does your blood work, he looks at the internals, because the internals usually show before the outside of the body shows. And I have never seen such terrible internals as we have right now. It's just sad. And I'm not trying to be pessimistic. I'm trying to be realistic. You know, what we have here now is markets basically over the medium term like to have a price-earnings ratio of about 15. That's about the historic norm. And right now we're at about 25. And whenever we get to 25, we're getting very, very close to a severe break. And then when we do go into the break, it usually goes the other way to even a greater extent. But the problem with this market, Greg, was Apple bought back over 40% of their stock. I mean, this is manipulation, so it means that the Apple stock, had they not bought back, would be 40% lower. IBM, for about 3 years, 12 quarters, with lower revenues, were borrowing money from banks and buying back stock. Now, how in the world could a stock like Apple, which everybody loves — I don't have an Apple, I have another thing — how could that stock go up the last 50%? The revenues haven't gone up 50%. This is all craziness. This is absolute. I've never seen anything like this. And what's happening is that in the S&P, where we have the 500 largest companies in the world, there's only about 5 that are carrying it. The average S&P stock this year is down about 5%. More than half the stocks are down on the, and of course we have the 5 big ones now. You know, Greg, it's never different. People are going to always tell you it's going to be different this time, but historically it never is. Now, if we go back to 1969, we had a thing called the Nifty 50. That's just when I got into the business, and it was, of course, we had less stocks then, but there was only 50 stocks going up, and the rest were retreating, and that was the sign that we were going to break, and that we break big. You know, my dad, in his memory, my father was British. He came here when he was 12. He was a captain during World War II. Great Army guy. I mean, he had to kill Germans. He didn't like doing any part of it. But he used to tell me, he would say, son, if the general is going forward and the troops are retreating, the general is in deep doo-doo. That's what we have here. That's what we have
and
here.
by Greg, just to give you an idea, you know, in my market letter and in my daily note, which, by the way, you can get just by going to Great Wise Oz and signing up for a trial. I have different sectors that I always look at because I think that they're important. And right now, to give you an idea, of the 8 defense stocks that I follow, 1 is up. Of the 15 food supply stocks, companies like Tyson and Campbell's and ConAgra and all of those, 2 of them are up, and neither of them is up more than 0.3%. My cannabis stocks are down. My oil and energy stocks are down. My home builders are slightly higher. And even the biotech stocks are down across the board. So what Dennis is saying about, the internals being so weak, the internals have been consistently weak. And to give you an idea of what is got this market up $67, which is, really no great shape. It's kind of a rounding error with the Dow up at almost 29,000. In the Dow stocks, you have Walmart on news that they put out months ago that they've reiterated, and that is their Walmart Plus, which is sort of like Amazon Prime, but not exactly. they put that news out 2 months ago and then couldn't get it started. So now they put it out again, and Walmart is up $8.50, and that adds $57 to the Dow. So the Dow's up 71, 57 of it is Walmart, 22.5 of it is Apple, and that's basically it. I mean, that's more than the market is up, just those two stocks. So, as the focus gets tighter and tighter, and by the way, at $98 a year for this Walmart Plus, I'm not sure that there are a lot of Walmart shoppers who will pay an extra $100 a year to have stuff delivered when they tend to go into the store anyway. It's not Costco, it's not Sam's Club, it's not any of those things, and it's certainly not Amazon. I mean, you have to remember, all things being equal, and Amazon being expensive both in real terms and in multiple, they give you much more for your Amazon Prime than Walmart will ever do. There's a streaming service. Prime Video is terrific. There's a music side of it. All of this stuff is included in, a $95 or $100 package. Walmart delivery for $98, and your purchase has to be over $35 in order to do that. So I'm not so sure that makes a lot of sense.
Okay, what was that CNBC story, guys, that Amazon could file for bankruptcy? I mean, that seems so hard to imagine, the way they're expanding. Even here, I mean, they've got this huge distribution center here, and
that's the upside for the failing malls.
Yeah, that's the cannibal theory, which happens where one company destroys so many others. Yeah, like look at the malls now. But look, let's look at history. Japan is the third economic power in the world, because history, if you don't study history, I think you got a lot of things going on that you're not going to be able to figure out. Japan is not it's an economic power after we come first, then comes China, then comes Japan. And they don't grow bananas there or pineapples. It's an economic power. Now, in 1989, the Nikkei Dow was at 39,000. And Greg, they were buying up everything. They were buying golf courses, everything. Oh,
yeah.
They
bought up half of downtown L.A. Yeah, I remember that.
They had Rockefeller Center and Paramount Pictures.
It's going to be the same way this time with us. So anyway, I got real bearish because it was getting to be a big, big balloon. Now, the long and short of it is the market 31 years later. Now, 31 years is a long time. Just think about this in all our lifespans. Is now down 50%. So could you imagine we Americans investing in the American markets if in 31 years from now, your account was worth half the amount that it is today, besides inflation and other stuff? And that's very easy to happen. But Greg, I want to tell you something. When I'm on my deathbed, they once asked Baron Rothschild, who was the wealthiest man in the world in the 1800s. He was a French bank. He was the wealthiest, before Getty came along with the oil and all. And they said, Mr. Rothschild, how'd you make all this money? He says, something? I was not smart at all. I was just lucky. I always sold early.
Okay.
That's like in my daily note, and sometimes in the letter, I use a quote by Bernard Baruch, and the quote is, "I made most of my money selling too soon."
Yeah. Well, okay. The Fed move. The Fed saying we could be at zero interest rate for 5 to 10 years. Is that? What's that going to do?
Greg, I'm going to sound very biased and partial, and I don't mean to be that way, but I'm going to give you the facts as you know. The Fed is almost always wrong. They're almost always wrong. I mean, Trichet in Europe, when he was back there as the main honcho, he's not there now. He was fighting inflation right before we were going into deflation. The Fed are economists, and economists, they're lucky that they have two hands, because they'll say on one hand, this is going to happen. On the other hand, this is going to happen. I don't know what would ever happen if they had a third hand. But the thing is they almost always do the wrong thing. And I will tell you, and you're going to perhaps take exception to it, they should have let the financial crises that happened in 2008, they should have let it happen. This is like the Darwin theory. It cleans out the system. We would have had a terrible recession, but we would have cleansed the system, and now we would have been much stronger. And even right now, unfortunately, they're helping out zombie companies. How could the airlines make it? Come on, guys. I mean, at Heathrow Airport in London, their revenues that they make is only about 25% of last year. So to show you how weak the airlines are, yesterday United and the other airlines have followed. They've given up their change fees of $200, which, as Charlie will tell you, is totally absurd. That's going to cost them $600 million. But the airlines, I don't know how they're going to make it.
Well, it's not only that. They're crying right now that if they don't get more, I'm not saying any, because they've already gotten a huge chunk of money from the government. If they don't get more before October 1st, Delta's going to lay off 4,900 pilots. UAL is going to lay off help pilots and regular workers. They all, with the exception of Southwest Air, they all are having to lay off people, and the only reason that they're choosing the October 1st is because that's when the last deal, when the money runs out. These companies are getting nothing, and we are getting nothing from giving them money. They spent, the airlines were great. I'm talking about as an investment over a period of years. But what was under the surface was them taking huge fees for everything but the lavatory and really sticking it to us. Those change fees, think about that. They're talking about getting rid of a $200 change fee on domestic flights. Greg, I used to be able to fly down and see you round trip for not much more than $200.
Sure.
And so now, now they're giving up all this. They borrowed money to buy back stock. And what's amazing is the amount of stock that they bought back is equal to the amount of money that the government has already given.
Yeah.
They did nothing about rainy day plans, and as you know, the airlines always get into trouble with, fare wars and such. Basically, where do people go? I'm not coming to Florida. I'm not even going out to Denver. I'm certainly not going to San Francisco.
Right.
The travel industry, the hospitality industry, is in such bad shape. It's unbelievable. And let me go a step further. We are really not a manufacturing economy anymore. We're a consuming economy. When you take the earnings away from all the hotel workers, and I'm talking about all of them, the maintenance people, the maid services, the behind-the-counter services, when they lose their jobs, or let's go back to the mall, Sears, Macy's, Penny's, all of them, and those are only the big ones. Forget about Abercrombie or Brooks Brothers or those idiots at Men's Warehouse, buy one, get six free. When all of those people, or even a portion of those people, are out of work, where does the consumption come from?
Yeah. Well,
it's not going to come, Charlie. It's not going to come. And the thing is with the airlines, they don't make it on a tourist traveler. They make it on the business traveler, who flies upper class or so. And you're going to have much less people now flying.
And frankly, Zoom is one of the tools.
Okay, guys, I got to ask you both on Zoom.
Yes.
We've seen skyscrapers. It makes no difference. Just name the town. That are virtually empty now because these companies understand they can utilize Zoom, and a lot of their people can work from wherever. Could be home.
Yeah, it's like the building boom that went on in and around Dallas 25 years ago, where the buildings, everybody joked, were see-through. Because there was nobody in them, and there were no window treatments, and you could look from the front to the back because nobody was there.
Yeah, well, and you guys were talking about hospitality. Universal today announced 5,000 people will be laid off in Orlando. And the same thing, Disney is
That's 5,000 families who are no longer consumers.
Right.
Yeah, and then, of course, how could a restaurant make it, even if they're allowed to have half the tables? It means that the people who serve there are going to make half the money. They can't make it. This is the problem. Well, look at the college football. Do you know how much money is made, Greg and Charlie, during the weekend when a major football team plays? People come into town. They use the motels. They rent cars. They use gasoline if they go, or they go on the airline. They patronize the store. They can't make it.
Yeah.
And I mean, the thing, but you see, we have right now about 30 million people out of work. How are they going to get their jobs back?
Right.
I just don't see that happening.
Well, and Charles's alma mater, University of Miami, will allow 13,000 people at Hard Rock Stadium with no booze and no tailgating. And that was the whole big thing with the University of Miami. And the big thing is no students. So, basically their crowd is going to be strictly donors and season ticket holders, period, end of story.
Yeah, I'm trying to figure out how they're going to do it here at Pat's games, where who are you going to let in? I mean, what's that lottery going to look like? This is not, some podunk stadium. This stadium is season ticket holders basically only, and a waiting list to get on. How are they going to decide which 13,000 people get to go to a Pats game?
Well, that's going to be a big time lottery. I mean, it's
so true. The problem is massive, but see what I see, and it may sound negative to you, but it's realistic. I've been studying human nature and dictators since I've been 25 years old. I studied Stalin and Pol Pot and Castro and Hitler, and human nature never changes. And in the stock market, there's three things that make you make money or lose money. One of that is greed, like we had with the dot-coms in 2000, where companies weren't even making money and people were buying the stock. Then we have fear, which is going to be happening sooner than you may think. And then we have when you get impatient. But the problem that I see is that I feel, and I hope I'm wrong, is that the person who will lose the least in the next 5 years is going to make the most. So that if you wound up losing 20% of your net worth and your friends and relatives and everyone else loses 60, you'll be way ahead. Now, there really is no reason to lose money, as Charlie knows, because Charlie's a great trader. I mean, if you learn how to go long and how to go short, you're not going to make money in every trade, but at least you have the ability to make monies in all different types of markets. And Charlie, you do such a great job with the options, which I don't have any expertise in. You know, that works out great for you. Isn't that correct?
Yeah.
Don't be
I mean,
modest.
it's not even really speculating on the downturns. It's just as simple. You know, there is no more conservative play than owning a stock and writing options against it for protection on the downside. It creates income. I mean, there are so many different methodologies that, as you're saying, it's really not necessary to be on the wrong end of the stick. I mean, we all will be, and like you say, it isn't every trade. But, you know, having a plan, this is exactly the problem with what's going on now. There are not enough guys who do the kind of work that I do or that Dennis does. You have all of these people who have nothing to gamble on, who are throwing their money into, you know, the Robin Hoods of the world. And, you know, they've never seen a market that goes down. And I think they'll be in for a very rude surprise, because while it takes increased buying to move a stock up, it takes absolutely nothing but no buyers to turn it down. That's why the market goes up 2/3 of the time, and it goes down twice as fast. All people have to do with this market is step away from the buying, and that you will really see a massacre here.
Well, that's coming, but let me tell you about my first love, and I'll sound biased. I love to trade futures for the following reasons. Number one, the currency market, which is called the Forex, Forex, is the largest market in the world. The currency market, Greg, trades $4 trillion every 24 hours. Could you ponder that number? $4 trillion?
No.
I mean, you know,
no.
Carl Sagan looked at the sky with the stars, and he says there's 1 trillion stars up there, but we can't tell the people there's 1 trillion. They can't ponder that money. So we'll tell them there's 1 billion. But the currency market trades more in 2 days than the stock market trades all year. But what makes the currency markets, now you see, when I first was in the business, you know, we were trading pork bellies and wheat and corn and sugar back in the 60s, and there's nothing wrong with that. But now we trade everything. We trade S&P futures, we trade crude futures, we trade gold, we trade platinum, we trade everything. But you want to have an advantage, and one of the advantages, gentlemen, is that the futures market, they call it now futures, trades 23 hours a day. The only time it really closes is, besides over the weekend, is if you're going to go on East Coast time, it closes between about, 5 o'clock and 7 o'clock. I mean, they close the gold market, the S&P down at that time, and then it opens up an hour later, except for over the weekends. And boy, could you take advantage of trading 23 hours a day. Now, you don't have to be there to trade. You could put orders in. But it's spectacular.
And one of the other things about the futures that Dennis hasn't mentioned yet is, unlike companies that can go to zero, really futures on product, gold, soybeans, corn, there's always going to be a buyer at some price, which is not the same as the market. Things do go to zero in the stock market. Just look at some of those nifty 50s that, Dennis was talking about before.
Well, you guys...
There's always going to be a market for corn at some price.
Sure. But like you were talking earlier about like malls and stuff, I was watching CNBC just briefly last night, and they were talking about Macy's stock is down to $7. My
Right.
God, you talk about a monster out of New York, and now look at it. it's a whole different world, and you hear that Simon is retooling some malls and turning them into business centers, and in some cases even some college type, private colleges, just to make ends meet. It's crazy.
And by the way, Simon has a bid in for Brooks Brothers and J.C. Penney in order to just keep something open.
Now that seems
that's
stupid,
amazing.
though.
And
why?
Part of that retooling of the malls is, as we were talking about before, on the Amazon. Amazon is taking big pieces of the anchor tenants, like a J.C. Penney, like a Sears, and they're turning them into fulfillment centers and parking lots for their zero-emission electric trucks.
Yep. Yeah. There've been rumors that that's going to happen here. They're opening up a 1 million square foot facility in Jupiter, just south of us, and it's going to be again for South Florida. They're talking about yet another fulfillment area up here in St. Lucie County, likewise. And they're talking electric vehicles.
Yeah, but you see, then we're going back again, which is correct, guys, is to the cannibalization. I mean, it really hurts many, many companies, so they get stronger and the other companies get weaker. And that's sad. I mean, there's not a happy medium there. Going back to the futures market, may I, Charlie?
Sure.
All right. Remember when we were younger and they used to feed us pablum? Did your parents ever feed you pablum? All right. Well, all governments, and all of Wall Street gives you pablum. They call it economic pablum. Like, to give you an idea, Charlie, do you know, and Greg, if you take the NASDAQ index, which is the strongest one at the time, if we go back to 2000, which, by the way, in 2000, there were no dinosaurs roaming around Florida, were there?
Yeah, me.
Was there?
Me.
Oh, all right. But in 2000, the NASDAQ was at 5,000, and now it's at 11,000, which means that in a 20-year period, as strong as it's been, of course, there's been individual stocks that did so much better, it's gone up 5% a year. Okay? And that doesn't count before inflation or taxes. Has it done well? Yeah, it's done well. But gold, you see, gold has no value. Gold's only good for filling teeth. Even though people kill for gold, it's owned by almost all the central banks of the world. China doesn't stop buying gold, and Russia doesn't stop buying gold. The gold market in 2000 was at 250, and now it's, let's say, 2,000. It's gone up 8 times, not 2 times, 8 times. And believe me, we should go much higher. Now, I'm not a gold bug. I've made a lot of money on gold, and I made money on gold when it goes up, and I attempted, as I have, to make money when it goes down. But, you know, if you look, hey, Greg, maybe you could help me, because I don't have the answer to this. I'm really a history buff. I think the gold market, and there are times you want to be long, there's times you want to be short. You can make as much money being short as long. Charlie, I think the gold market, when gold got down to 1,050 about 6 years ago, 5 years ago, after being up in 1920, I told people that we were going to test the high again above 1,900. And they said, how do you know that? I said, I don't know for sure, but I know the following. I think the gold market was the greatest bull market ever that I ever saw, because I never saw a market going up 12 years in a row. For 12 years now, I know Apple was much higher, and the Malibu house was much higher, and XYZ was higher. But Charlie, I don't think they went up every year for 12 years. Is that correct?
Yes, that is.
All right. So now that now that we're here, I would say to you that we're probably going to see, of course, there's never any guarantees, but we should see at least $2,800 gold, and it could become as early as the next 12 to 18 months. But I think that the dollar, I think America, unfortunately, and this is our country, is in deep doo-doo. We have a Federal Reserve that has gone bonkers, who don't know what they're doing. We have civil strife here right now. We allow GAAP earnings and non-GAAP earnings on stocks, which is absurd. But the problem here, guys, and my heart goes out to this, American people don't have savings. See, all the countries of the world are all printing money to some extent, and they're doing all this monopoly money. But the difference is Germany saves 25% of what they make. Japan saves 25% of what they make. I have a house in Italy on 25 acres in Tuscany, and people there really are not in the market, but they own huge amounts of real estate with no mortgages, that was given to them from their family. So this is the problem. We have a government that's broke. Our government is broke, and we have a middle class here right now that can't rub together $5,000, $10,000, and it's scary or concerning. And the thing is that to be forewarned is to be forearmed. So there's nothing wrong. There's nothing wrong getting old, and there's nothing wrong being poor. But it is a shame to be old and poor. And that's going to happen, unfortunately, to many people I see coming down for the rest of this decade.
Okay, guys, explain the silver market. Everybody, you look at television, it seems like these commercials are on every half hour. Silver is, going to the moon. It's used in every computer, every phone, that kind of a thing. And it barely moves.
That part of the silver market is actually, from my perspective, almost a negative, because that makes it an economic or an industrial market. And those kind of markets can get very badly hurt. And, if you don't want to buy an $800 phone, or you can't buy an $800 phone sales will go down, as will computer sales and iPads and everything else. But what it does have is it has a relationship to gold. It is a precious metal. On the basis of that, it tends to move along. Now, the issue here and why there is so much interest in silver, I think, or one of the reasons, is the fact that gold has already well more than doubled and is at new all-time highs. For people who can't afford to buy much in the way of gold through those people on TV and the radio and, Monex and a couple of others, silver is a great product for them, because silver at 25 or 30 is still more than 60% down from its record high. So if the gold market and the platinum market and the palladium market are going to pull all precious metals up, then silver on a percentage basis is the big winner. There are plenty of days where I sit and I see the little bug on CNBC where gold is up 1% and silver is up 3%. There used to be a great relationship where an ounce of silver or an ounce of gold sold for 35 times the price of silver. So the ratio was 35 to 1. Recently, and when I say recently, I mean in the last 90 days, the relationship between gold and silver has gotten so out of whack that it was actually 130 times more expensive. Right now, though, you have I'll just use round numbers, you have a $2,000 price of gold, and silver is about $28. We're back to 71.5 times the price. Silver is 1/70th of the price. And so, there's a lot more room. There's a lot more, if you think about it from the marketing point of view. I mean, because Monex and all these others, they're businesses, just like everyone else, and they work on markups. But on a marketing basis, it's easier to sell a $28 silver dollar than it is to sell a $2,000 Cougaran.
Charlie, that's so true. If you look at the premium right now at the present time on a gold coin, the American coin or anyone is about 4%, but on silver it's 15% at the present time. And the thing with silver is, besides, as you have said so aptly, that it's the poor man's gold, Charlie, if we start getting inflation, and I don't think we ever lost inflation, as you do so well when you write your daily thing, just go to a grocery store and see what inflation's all about, or see how they make smaller packages. But if we get inflation, and I think it's starting, and that's going to be another hindrance to the Fed, they're going to start seeing higher interest rates with the bond vigilantes, and they're going to see higher inflation. Silver does better than gold if we go into an inflationary environment. At least it has done that historically, correct?
Yeah. I mean, even right now on the bug on TV, gold is up 0.3%. Silver is up 1%. So
but
silver's going up 3 times faster than gold right now.
As I got older, Charlie, and I got a lot of years behind me, I have found out that there really, including me, there's really no brilliant people out there. So what I have done is I've diversified. I'm in 19 different things, and I hope they all do well. And the same thing comes with investing, as you do so well. People have to learn how to go long, how to go short. They should have maybe common stocks, maybe have have options, have puts, calls, and also have futures. They got to look into that. Now, just know that in the futures market, I would say if you do it yourself, you got about an 80% chance of losing money. I think that's a historic norm because it's like doing your own brain surgery or your own root canal surgery.
And frankly, people are not disciplined enough. I find that more important than what I buy and at what price is the size of the position that I take that's appropriate for me, so that I don't get emotional because I'm so tied into success or ego of wanting to be right. And, people that overtrade fairly consistently get blown out of the market. I mean, it takes a fair amount of discipline. In my $10,000 options account, I start every position with no more than 6% of the portfolio, because if I lose 6%, I'm not happy about it, but I can make it up. And so, that's a very big issue when it comes to trading. And I know that we have to wind down, so I just want to make a couple of quick comments. Number one, I just added to Jan 1 again today at 6.5. The day after we were on the show, the stock jumped remarkably up to $9.10 and has, slowly come back down. And I like it here. I mean, the first position was at $3.36. So I'm actually averaging up here. And I want to tell everybody that my service is available if they go to Great Wise Oz with Z's. So www.greatwiseoz, GreatWizeOz. And you can see the work. We are 100% transparent. You can see the last 5 years of every trade, good, bad, and ugly. And you can also sign up there. You can sign up for the service, but more importantly, you can also sign up for a trial for the service. And we also have, from the educational side, we have a Discord room with 3,000 participants. And while I'm there all the time to help out with questions that are asked, if I'm not there, there are still, it's a huge community, and it's very advantageous from both trade ideas and education, people explaining the how and why they're making a specific trade. So that's greatwiseoz.com, and we're always happy to help, and there's always somebody in the room to help. And I really want to thank Dennis for coming on because, as I said earlier on, he is without question the best futures trader that I have ever met, and I've met a lot of them. And so, he and I talk every day anyway, and he's one of the reasons why I've started to follow the ETFs that are based on commodities. I was always in the gold and silver, but now I'm also trading coffee with the proxy JO. I'm trading Bitcoin with GBTC, trading lumber with Weyerhaeuser. And so I think that as long as the market is so crazy and the futures, the products that we use every day are available to be traded, that I think that's where our focus has, really broadened.
That sounds great. Dennis, how can folks get in touch with you in lovely Denver, Colorado?
Well, they could always call Charlie, but if they want to get in touch with me, they can call me on my. Thank you, Greg. My phone number is area code 719-488-1914. That's 719-488-1914. Or I'll give you my email. You don't parle Italiano. It's the name of my house in Italy. It's Monte della Via
Whoa!
House on top.
Cool.
Yeah, well, at least a nice country, but they could always do, it's montadelavia at gmail.com. Should I spell it out, Charlie?
Sure.
It's MONTEDELLS as in Louisiana, A as in Alpha, V as in Victory, I as in Isaac, A as in Alpha, at gmail.com. Or they could always reach Charlie,
Right.
Charlie could always take care of it. And then if they ever spoke to both of us in a conference call, I know I sound biased, I think they would be dazzled by with our experience and the diversification we have, because we cover so many different bases.
Yep.
And if you're not doing everything, you're missing out on a lot right now, right?
Yep.
Yeah,
Absolutely.
don't
and
forget
all
it.
of my contact information is on greatwiseoz.com also.
Yep, and folks can see your charts, your pre-charts and post-charts on our WPSL.com website, too. It's kinda cool.
I do a pre-opening comment and a closing comment with charts.
And this
Work so hard.
this
But
audio.
Charlie,
Whoops.
what?
Go ahead.
Besides I'm sorry, Greg. Besides your experience, is that you're so disciplined and methodical. You see, it's not what you make; it's what you don't lose. And there's very few people who do it any better than you. I mean, I
All right.
really commend you for that.
Whoa!
I'll be back next week.
Yeah.
Thanks, Greg.
Hey, well, that's okay. And once again, Charles, we got about a minute and a half left. GreatWiseOz.com, right? Correct, Charles? Whoops! Oh, okay, Charles. He's got to go somewhere, no doubt about it. GreatWiseOz.com. Take a look at his pre-report, his post-reports, WPSL.com. And don't forget, the audio version of this program will be on WPSL TV on YouTube. Obviously, no video yet. We'll get that set up through Zoom in the next week or two, and should be kind of cool. So, glad to have Charles back. The Great Wise Oz. Money info. Right here on WPSL, Port St. Lucie. Talk of the Treasure Coast. Webcaster to the world.